Why most traders never win consistently? Let's face it, most traders lose money. It's not because they're not smart. It's because they follow the wrong map. They jump from one strategy to another, from one YouTuber to another, searching for the holy grail setup that will magically make them rich. But here's the harsh truth: there is no perfect strategy. Most traders lose because they focus on strategy first and discipline last. But in reality, it should be the other way around. Even the best trading strategy in the world won't help you if your psychology and risk management are broken. What we're going to explore today is not just a strategy, but a complete system. One that works across markets, timeframes, and trader personalities. A system that, when followed with discipline, can give you consistent results month after month. Foundations of a consistent strategy. Consistency in trading comes from having a system that is simple enough to follow under pressure, logical enough to understand without guessing, flexible enough to work across market types, safe enough to protect your capital over the long run. There are three pillars of this system. 1. Price action mastery. 2. Risk management excellence. 3. Psychological discipline. When these three come together, you don't just win trades, you win consistently. Price action, the heart of the system. Price action is the art of reading market movement directly from the candlesticks, no indicators needed. Why is this powerful? Because it allows you to see what the market is truly doing, not just what an indicator is suggesting. Let's break down the price action component of this strategy into steps. Step 1. Identify the trend. Use a clean chart. Zoom out. Is the market making higher highs and higher lows? Then it's in an uptrend, lower highs and lower lows. It's a downtrend, sideways movement. Stay out or go lower time frame. Step 2. Mark key zones. Support and resistance zones are your battlefield. Focus on daily high, lows, weekly levels, order blocks, previous reaction points. Step 3. Wait for price to react at a zone. Don't predict, react. Let price come to your level. Watch how candles behave at the zone. Step 4. Look for entry confirmation. Examples include pin bar reversal, bullish, bearish engulfing, break and retest of key level, inside bars or consolidation breakout. Step 5. Entry, stop loss and take profit. Enter only when the setup matches the criteria. Place stop loss beyond the structure, not just random 10 pips. Target 1 to 2 or 1 to 3 reward. This alone, just price action, can make you profitable if followed with discipline. But we're not done. Risk management, your safety net. Risk management isn't just a boring topic. It's the one thing that separates full-time traders from the dreamers. The rule of 1%, never risk more than 1% of your capital per trade. If your account is $1,000, your risk per trade should be $10. That might sound small, but it keeps you alive long enough to grow. Why 1 to 2 and 1 to 3 reward matters? When you aim for 1 to 3 risk to reward, you only need to win 3 out of 10 trades to be profitable. Most amateurs go for 1 to 1 and lose 60% of the time. That's a recipe for disaster. Stop loss isn't optional. Every trade must have a logical stop loss. It should sit beyond market structure. Never trade without it. And never move it to hope for a bounce. Position sizing is your secret weapon. Don't just trade the same lot size every time. Adjust it based on the size of your stop loss. Use a calculator. Be a pro, not a gambler. With proper risk control, even an average strategy becomes profitable over time. Psychology, the invisible killer. You can have the perfect strategy, risk rules, and entry plan, and still lose money. Why? Because your mind will betray you. Fear and greed. Fear makes you exit too early. Greed makes you hold too long. Both destroy your edge over trading. After a win, you feel invincible and want to double it. After a loss, you want revenge. Both lead to overtrading and account destruction, lack of patience. Sometimes you'll go days without a trade. That's fine. One good trade is better than 10 random ones. But most traders lose because they can't sit still. Solution: rules, rituals, and routines. Set rules. Trade only when 3 confirmations are present. Build routines. Check charts at fixed times. Create rituals, meditation, journaling, walking after trade. Discipline beats emotion every single time.